Welcome to Power Charting. I'm Bruce Fraser, your host. We have a most special session for you today. We have Johni Scan in the house, and that is John Colucci, and he is our very special scan master, and he is going to talk about scanning for the Wyckoff method. John, thank you for being here.
Always a pleasure, Professor Bruce. Super great honor to be here. Really looking forward to the show.
We're going to do more of this in the future because I think this is incredibly valuable. Now, just to make a couple of really quick announcements is tomorrow, Saturday, September 18th, the TSAA is going to have their annual fall virtual conference, second year in a row. It's been virtual. We have an incredible lineup of really special speakers through the day. You do not have to attend live. As a matter of fact, if you see this after the conference is over, you can just by being a member of the TSAA, you can not only get the recordings of this great conference and watch them at your leisure, but you will get great content, TSAA, technical securities content year-round in this wonderful not-for-profit organization. So sign up, become a member, enjoy all the benefits of membership and this incredible conference that is going to be recorded and live on September 18th. And then the other thing is you're going to be so dazzled by the great scanning tools that Johni Scan is going to show us today that it's part of a much bigger universe, library of a great scan technique. And you can go in, he has a 3-part series of specials on scanning, which goes from basics to advanced mastery concepts. That is incredible. I attended, and it is very worthwhile, especially if you want to become a master scanner at the Wyckoff method, among other methodologies. And there's the web address at the top, and go check it out and go there to learn more. And there's also some free content from John in the website also. So go check it out. And with that, we're going to have just a brief comment here about scanning within market context. This is a chart that I've used many times. And John, the point I want to make to people is that you just can't have a scan for any endeavor, any methodology in the markets that works all the time. And the problem is that you always have to take scanning within the context of the environment in the market you're working in. Wyckoff does this very well. And so Wyckoff really identified 4 key conditions, which was accumulation, markup, distribution, markdown. And he showed how these 4 basic cycles of the market correlated with the business cycle. But also these cycles show up in smaller time frames in addition. And the thing is that you need to have a scanning engine, a scanning tool that would work for the completion of accumulation, a scanning tool that works in the markup phase, a scanning tool that works for distribution to identify these very best ideas for the environment that you're in, and then a scanning tool for downtrending or markdown conditions. And John, your thoughts on this?
Absolutely. No single scan is going to produce trade candidates for you at all times. You need to scan in the context of the market and then take action based on that context. So you're absolutely right, 100%.
And so we do teach in the Wyckoff method, if you read my blogs, et cetera. And also John does this exceedingly well, and this is going to be a big part of our discussion today, is that the scan is got to be within the context of the current market environment to get you the very best results that you're looking for. And then of course, you've seen this chart before, and this is basically just superimposing the basic concepts of phases of accumulation, phases of distribution, and then phases of markup and markdown as they occur in the Wyckoff cycle, which is the conditions that we identify or seek to identify in the way that the stocks are behaving. And so this being able to find a list of really effective candidates that comes into a play at this point in time in an accumulation, which results, being able to put eyeballs on the very best accumulation ideas is a very mastery concept with scanning, something that John is working very hard at, and he's very, very skilled at it. And so with that, we will stop here and change screens over to John, and we'll be right back. Okay, John, we're back and you are in charge.
Fantastic. Large and in charge, place I like to be. Talking about scanning, and scanning really is a way for us to extract information about the market and possible trade opportunities. It's a process of asking a database, the StockCharts database, for information, candidates, things of that nature. We'll go through a little bit of that today. But what we're going to focus on first is a very, very simple scan that is designed to extract some information from the market, not necessarily trade candidate, just information. What if we simply examined a declining 50-period simple moving average? A lot of people like the 50, a lot of institutions rely on and defend at the 50. What can we do to educate ourselves about the position of stocks who have a declining 50? So if we were to run a scan of this nature, here we have several indices, the Dow, the S&P 500, and the NASDAQ, and there is overlap there. But for the folks at home, it's 3 indices that most of us can readily identify with. And if we ask ourselves, how would we determine that stocks have a declining 50 period? One of the phenomenal commands in the StockCharts database is the slope command. So we have the ability to essentially create a linear regression line over a set number of periods, in this case 63, corresponding roughly to a calendar quarter of trading days. And our target for that analysis is the SMA 50. So we're asking that the slope of the SMA 50 simply be less than 0. It's negative. We are also asking that the close is less than the 50. And we're using a little bit more sophisticated syntax for that purpose, using the percent difference scan syntax. And we'll take a look at why we use that. You could very simply say, and close is less than the SMA 50, but there's a reason we use that. We're going to rank these by the rate of change. How fast is the SMA 50 changing over 63 periods? So let's take a look at what running that scan would do for us. Here we have a total of 160 stocks who are contending with a declining 50-period SMA over a calendar quarter. We're also asking that these be ranked large to small by the rate of change of that 50 period. So here we have a slightly positive rate of change, and I'll show you why that can be a little bit tricky. But for the most part, we're negative on those. And let's take a look at a couple charts. So usually I do the first 5 on the list. That gives me some sense of whether I've received what I asked for. But here we have Schwab, and its OBV lines are at the top, relative strength. in the middle. And then here's our chart with the blue line is the 50-period SMA and the red line is the 200. This is Tuesday, September 14th. So this is a day or so old. And we see that we have a consolidation in Schwab with a close under the 50, and the 50 period is declining over this period of time. And if we go back to a calendar quarter, we may be somewhere in here where we're just slightly above our prior rate of change 63 days ago. So rate of change can be a little bit tricky when applied to lines because they can meander and still produce positive or negative results. Here is Aflac, life insurance. Again, similar profile. We see we have a little bit of an uptick in the SMA 50 there. We really have to get in here and see where that is back in here to ensure that it's negative. Sometimes we do receive anomalous results. We want to study those because they can indicate there's a problem with our scan. Here is United Health Service. Again, structure has formed. We're near support on that, and we see it's declining 50 over this period of time. Note that the relative strength is also flagging on the stock, but we do have a divergence in the on-balance volume. So accumulation could be occurring behind the scenes, and this is merely a period of weakness in what otherwise would be characterized in the world of Wyckoff as a reaccumulation range. So our next stock here is Marathon. Integrated oil and gas. We do see a declining 50 of late, a possible head and shoulders pattern, but we do have some indication of an uptrend, possible move up here. We have a little bit of an uptick in relative strength. OBV is not that convincingly bad, and our 200 period simple moving average is still up. So some ambiguity on that chart. Our Berkshire, another perennial favorite, weak relative strength, similar consolidation area, somewhat ambiguous on the on-balance volume. So we have declining 50, but not everything else is lining up for a short candidate. So can we use the concept of a declining 50 period average to create a short position?
You know, what I found interesting about those charts, just you don't have to go back, but just the notion that in each of those cases with that super simple scan that you just did, you are showing stocks that have gone from uptrends into range-bound conditions and are potentially weakening into the late stages of some kind of distribution. So I found that very interesting, just from that very simple, simply constructed but nuanced scan that you did.
A lot of my scans are quite simple, 2-3 lines. The scan that we're seeing now on the screen is more sophisticated because Professor Bruce and I have worked on several iterations of this scan based on looking at simply a declining 50, and then how do we persuade the engine to give us things that are more likely to be short candidates, especially stocks that may indeed rally at or near or even above a declining 50 period moving average, presenting an opportunity to enter short at or near that time. And that would be, in the world of Wyckoff, we would call that a last point of supply, which can occur one or more times prior to a cascading failure, or what we call markdown. So in this particular case,
and so let me just make the point.
Go ahead.
What you just said there, John, is relevant to context, because the last point of supply type rally would have come at the conclusion or the very late stages of distribution, which is a period of a range bound condition, sideways trading that is about to become a markdown. And so that is what's promising about the idea of a scan like that, is that it tells us when we're getting to that really late stage of a period where a transition is about to occur from one set of market conditions in the cycle to another.
And it can also be groups or sectors of stocks, industry groups that aren't performing well or becoming out of favor can experience significant price declines and provide
Very
opportunity.
Yeah.
So here we have, again, our slope command applied to the OBV signal. OBV signal is essentially a moving average of the OBV line itself. So it's the signal line calculated in this case over 50 periods. We're asking also that our 50 period signal for OBV be greater than its 10 period. So weakness in the 10 because the 10 is now under the 50. Perennial favorite in the world of Wyckoff, relative strength, almost really a secret weapon. And the StockCharts engine lets us use that quite effectively because we can compare the price of a security to an index of choice. In this case, it's the SPX. So we're looking for a relatively short period of relative strength underperformance, 21 periods of a 10 period relative strength analysis. And that almost functions like an exponential average because it puts a lot of weight in the more recent past. The slope command is also one that can be applied to the SMA itself, of course, and here 21 period SMA 50 is also negative. We're also using a very, very interesting piece of syntax from the scan engine at StockCharts, and that is the percent difference. So we can actually use the scan engine to measure things. In this case, we're going to measure the difference between a close 10 days ago in the 50 period moving average and the current day's close on the SMA 50. So we want the prior close to be further away from the SMA 50 than today's close. So we're pulling into a declining 50. And that is the idea behind the scan, is we want something that at, near, or above a declining 50, and then it fails. So we're also going to at least initially require that all of our closes are below the 50. And you see how we use the percent diff command in a number of different contexts here. We can also rank by the percent difference. In other words, we can order our results based on the close and its proximity to the 50 period moving average. Very powerful.
So the idea here is that we're using moving averages, we're using OBV and these other indicators, percent relative strength and so on, to be able to then construct a scan that we can then go in and go chart by chart by chart, bar by bar, Wyckoff, old school methodology, and then be able to put eyeballs on the very best ideas using the scan criteria and using very effectively these moving averages. Because, and this is something that John and I worked on conceptualizing, is that this is what it looks like when a stock goes from uptrend to distribution to downtrend. This is what the moving averages tend to look like. This is how they change. This is what rate of change looks like, and so on. And so my other thought here, John, before we move on, is that please, people that are watching this, take and put into the StockCharts scanning engine this language, type it in, screen capture this, type it in, and then start fooling around with it and see what kind of results you get, because those results will change from day to day. So anyway, I just want to add that
absolutely.
as we go. Yeah.
Yep. So sometimes what I like to do, especially with more sophisticated scanning language such as this, we have 6 lines of code, and that's a lot for me. I prefer to be very, very simple and direct in what I'm looking for. Here we see the layers of analysis illustrated in what I call price action mapping. So we map out the price action that we're looking for, and that would be the OBV signal is down for the 50 period. The 10 period is below that, and it will also inferentially be down following it. It could trend up momentarily, but it still has to be below the 50. Our SMA 50 has a negative slope, meaning it is trending down. And 10 days ago, our close was further from the SMA 50 than it is today. This green dashed line is the 0 day. That's the day the scan is run. I tend to run scans based on the last market close. You can run them intraday, but I prefer to do it on the last market close. So let's see what this scan does for us in terms of opportunity. 34 results, a very manageable number, down from 160. So we have negative values for the difference between the 50 and the close. And we see very close on Fox. September 13th was the day we ran this scan. We'll take a look at these charts real quickly. Downtrend, rally to the 50, pullback. Down channel, little break out of the channel, but still negative OBV, which we asked for, negative relative strength, declining 50, still rising on the 200. But look what happened to this stock when it approached the 50. Up, down, and a black candle here, meaning that day was up, but it closed below the open. So interesting there, pushed back. This can be described as the concept of ice in the world of Wyckoff. Ice is a overhead resistance of sorts, and very colorful language from the original package course for Wyckoff, and very, very interesting to take a look at that. Certainly recommend Professor Bruce's blogs. There's the Bible and Dr. Hank Pruden's book on trading, incredible resource. So here we have Huntington Ingalls defense contractor. Again, look at the opportunity here, up to the 50 and down. So again, the 50 is acting like resistance. We see some weakness starting in the OBV and longer term weakness in the relative strength. So very, very interesting there. Dow Holdings, a Dow component, down on the OBV. Look at these attempts to overcome the 50. Weak relative strength. So we're lining up all of the factors that we want to see to describe the weakness that would allow us to initiate a short position with some confidence. Globe Life Insurance also quite weak, rally to the 50 and down. Here we would have an initial distribution structure, markdown, horizontal, what may be a redistribution range, getting set to fail again. And look at how important the 50 was here. We wouldn't have picked this up at the time on this scan because we had a rising 50, and we're taking a little bit more sober approach, saying, well, we're not going to try to catch the first wave, but let's see if we can get the second. So those are.
And I have to say that I would stop the recording here briefly because somebody was going by making a lot of noise with some kind of a blower. So I wanted to just stop at that point. But notice how all of these charts have got these great distributional structures that are forming And we don't know that they are distribution. This is why you have to put eyeballs on the charts and actually do the analysis with a Wyckofian orientation to be able to determine the best place and time for action. And we don't necessarily recommend short selling, but this is a pattern, a process where you could either use it for determining the best time to sell your individual stocks, or it might be for those that would like to and choose to short sell, they could look for short sell candidates. So anyway, with that, let's carry on.
All righty. So let's do a little something special. Let's do a little proof in the pudding here. Let's take a look at some of the stocks that we've already looked at, but now 2-3 days later. Let's see what happened in the face of time here. So Fox came up as the first stock for us, and we see that really has rallied up. So its relative strength has popped up. Its MACD is starting to approach even exceed zero a little bit, but OBV still downtrend, really going to the top of the channel line. So interesting there.
It's really impressive to me the way the OBV and the relative strength have such high correlation to each other. And they're constructed completely different ways. And one involves volume and the other is a ratio of a stock to an index. And it's just quite remarkable to me how well they work together, which may show the footprints of the institutions in these stocks in the way that they're distributing shares on the way down.
Right, and one of the reasons we constructed the scan for position entry to include a declining OBV, as we saw earlier, you can have divergences between the OBV and the relative strength, and that can create a tricky situation. Let's take a look at one of the favorite stocks out there. In fact, we're using this product right now, Zoom. So Zoom, big performer all year, and we see it attempted to rally up to the 200 and then crash through. So this is at the end of the list because it is furthest from the 50. So one of the great strengths of the scanning engine at StockCharts is the ability to rank and to change the order of that rank.
I hope Zoom doesn't cut us off for showing this chart. It's not looking great right here.
Yeah, it is. It is troubling. We see gap, similar situation, down, and look at the attempt here to rally is being thwarted, and we're going to have probably a close below halfway on that bar. Very unconvincing in terms of the OBV and relative strength.
We are going to now turn our attention to a scanning concept on the long side. There are really a number of different scans that you can use and put into your scanning engine. And what I do is I actually take the time to actually type these scans in for myself. And that helps me to actually learn the syntax and learn how to do it. And I'm actually getting to be almost good enough to be John's assistant. So anyway, here we go. So John, what are we going to do next?
Well, Professor, you're still the brains of the operation, no matter what.
Oh, you're too kind.
What if we took a look on the long side?
Ooh, I like that.
Yeah, can we, even if we have some market weakness, and there's some ambiguity in the market weakness lately, but what if we start to look for the long side? And
well,
can we?
Yeah. And let me make a point that, you know, sometimes you get into markets which I've been calling bifurcated markets, which are markets, and this happens late in bull runs actually, and that doesn't mean the bull run is over. It's just as they mature, some of the stocks that were strong early tend to lose their relative strength and their momentum, and then some stocks and groups will tend to come into favor and act better late. And so you might see the some of the inflation sensitive ideas such as the steels and the aluminums and energy and so on, start to kick in later in the advance of the stock market cycle and also in the business cycle. So anyway, so there is the potential to have themes like birds of a feather start to perform differently as you go through the cycle. And that's how these scans can be really helpful. Because one of the things that John will do is he'll show a scan, then he'll say, look at all of the stocks that are in the same sector, same group in this scan today. And he'll see those and see that there's thematic nature to the stocks that are being picked up by the scan on a particular day. Anyway, John, take it away.
Absolutely. Well, we're kind of doom and gloom on the declining 50 and this and this and that, and what really is the health of the market. And we did an informational scan first and transferred that into more of a positional scan, something that we could initiate a position on. But what if we look to the other side of the coin, the long side? This is a little breakout scan here, and it uses a very, very powerful feature, max. There's a min and a max, and it lets us pick a high value over a specified period. So 1 day ago, our close is max 30. So we're looking 1 day back, 30 days behind that for the highest close. And our last available close, which would in this case be September 14th market close, we're higher than that. We are greater than a 30-day high close. In other words, a possible breakout. Not only do we have a possible breakout, but we have incredible momentum preceding that. We have a count up feature, which allows us to tell the engine only look for stocks which have closed higher, higher, higher. And in this case, over 5 periods, it's greater than 4. So really, that's saying give me 5 up days preceding that breakout. Very, very powerful. We have a combination of a new recent high and momentum getting there. And Professor, where do we like to see that type of price action in the Wyckoff world?
Well, and again, it goes back to the idea of context, and that we would like to see that happen as what we call phases C, phase D. So phase C is the final testing phase in a reaccumulation or an accumulation. And then phase D is a very sharp rally up to and through the highs of the reaccumulation area, the high or the resistance of that area. And so when we see really strong action in a stock, that tells us in the context of the completion of, say, a reaccumulation, that the stock is in really strong hands and is acting very, very well, bar by bar. And that tells us that it's time to get busy in that stock and participate or add to positions.
Absolutely. So let's take a look at what happens when we run this scan. We get one stock, analog devices, semiconductors, medium grade scooter around 75.
Now, let me ask you, John, the fact that scans only generated one result, does that tell you anything specifically about the market in general?
Absolutely, absolutely. If your long-oriented scans are returning few, if any, results, and then conversely, your short focus scans are returning a significant number of results, that is a comment on market health right there. Very, very effective. You can deploy a bevy of scans on a daily basis simply to ascertain what the returns are showing. Lots of longs, strength. Lots of shorts, weakness, possible short candidates, weak candidates. But it's also a comment on the overall market. Because remember, the indices that we watch are really an amalgamation of stocks either weighted by number or capitalization. So it's very, very important to pay attention to the number and character of the results that come back on your scans. Absolutely. So let's take a look at analog devices. Here we have a weekly chart, and look at the strength in this chart. OBV up and running. The cyan line is the OBV line. This is a 10-period moving or 13-period moving average. This is a weekly chart, so that's 13 weeks, calendar quarter. 39, 3/4. Look at the beauty of boom, up, 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 and increasing angle of ascent. Here we have what we would call a large causation build. Breakout, that's that phase CD that we talked about earlier. Here we have another structure and a structure on top of that structure, with this bar being the weekly bar. We're up 2.8% for the week so far. And look at this tremendous volume here. Little bit of supply shows up afterwards, but still holding at a higher low. Lower wick the next day or two shows demand came in at some point and pushed that price back up. Our relative strength over a long period of time has somewhat of an erratic line itself, but the moving average over 39 periods, very smooth, mostly up at all times. So really incredible chart. Let's take a look at the daily chart here. And we see that we have talked about this structure here after the breakout. Nice horizontal movement. This would be our, what we would identify as a phase C. And look at that jumping, leaping action right up to holding above prior resistance. So prior resistance, new support, really basic stuff back to Edwards and McGee there. It's true. We can see it. So here we have the area of our scan. 30 periods, new high, incredible momentum preceding that new high for 30-day period. We see similar momentum on the breakout from this structure. This we would refer to in the world of Wyckoff as a backing up action. It really is the ability of price to hold over prior resistance, now support, and maintain that without moving too far back into the original structure. And something that's very interesting on this chart is look at this aggregation of volume, especially August 23rd-ish here, this big red bar, and we do not see that selling effort was rewarded. So very much of a disharmony between one of the laws of Wyckoff, effort and result. A lot of effort, no result, very bullish. So we have analog devices there, and I can even update this chart to the minute, and we see our structure is still in place, and we may indeed be starting to back up. Here we had a little bit of disharmony in effort and result. We had unrewarded effort on these two bars, which is a signal for change. And then we have a white body red candle, which is somewhat positive, but look at how low that volume is there. Volume starting to move up on the 10-period signal line. We've retaken the moving average on the relative strength, and we're turning up on the shorter term averages here, the 10, the 3, and so on and so forth. So very interesting potential here. This actually is not a bad place to initiate a position. If we hold in this area, we have a low volume reaction back to prior overhead resistance, and Wyckoffs love that position.
Yeah, so it's such a great nuance, because see, once you get the stocks in your scan to look at the candidates, and you can see, as a matter of fact, this week's Wyckoff market report, which I write with Roman, we are showcasing the semiconductors, and ADI is one of the stocks we're showcasing. And here you can see that there is a pullback here at a resistance area, a pullback, and then a rally back to the resistance area, another pullback. The second pullback is longer and it's less deep. And it actually just tests this low that was made in mid-August. And so there's some elements of absorption that we would say that have come in here, which shows that on the weakness that there's strong hands that are buying stock, where here there was more of just a sheer supply taking place. And look at all the volume that comes in near the bottom of the range. Now this rally, this very steep rally, really does demonstrate that there's really a shortage of supply. A slightest increase in demand takes it right back very quickly up to the resistance area. It's the quickest rally that we've had to the resistance area, even a little bit stronger than here, even though this was pretty strong. But now what we would want to see, and John already said this, so I'm repeating what he said, is we would like to see the ability either from a new high or right here to be able to become very dull and quiet and just sort of hang in this area or just start to move away from it, which shows that there's a change of character from these reactions that have preceded it. That's where we're starting to put our Wyckoff chart reading nuance to work, but it was the scan that got us to this idea, which is, I think, very interesting that this is what it came up with.
And we should let folks know that was entirely coincidental. I remember your surprise when I mentioned, well, let's try this one. And here's one result, ADI. Oh, geez, we're right about that this week.
Fantastic.
So really, you have such incredible power with the StockCharts engine. You can define your rules and your playground. You can play whatever game you want to play, you can play, and that engine will find it for you in a very, very straightforward, intuitive fashion. Just fantastic. The folks at StockCharts have done such a wonderful job, and it works so well for Wyckofians. And I certainly would urge everybody, check out the Wyckoff Analytics site. There's so much material that's of service to the community, meaning it's free. And you really get a great jump on having a system to understand markets and price actions. Just incredible.
So the whole goal here, just to conclude, is to accelerate the process by which you become a much better scan developer and a scan user, and to make these resources available to you so that you can start to really have effective scanning. We get so many requests for, do you have a good scan for Wyckoff? And as you can see, it's actually a whole series of contextual scans. And John and I are working on this. John is just incredible. His skill sets, his talent here is just remarkable. And he's doing things I couldn't even imagine. But we sit down together and we go, well, what about this? What about that? And what we saw today is really an unfinished process. And there's more to do, and there's more ways to refine and improve the scans that are here. But this is what we're working on. And these scans are designed for our Wyckoff community. These are for you. And so we want you to really benefit from these tools. But other than that, please just keep them a secret. They're just for you. So don't share them with anybody. and John, any final thoughts?
You're making me blush, Professor.
Oh, you're phenomenal. It's such a joy to collaborate with great Wyckofians like John and our fellow Wyckofian Alessio, and with others, and with Roman. And it just really makes it fun. You at home, you at work, wherever you are, find like-minded Wyckofians that you can collaborate with, and then collaborate virtually with us. And we love it. And we really appreciate you, and we appreciate the time that you put in to watch these episodes. And John, will you come back?
Absolutely. We've got a lot of work to do, Professor.
We have a lot of work to do. Well, I'm looking forward to it. And with that, we're going to say so long for now, and we will see you next time. Thank you, John.
You're welcome. Thanks.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.